Oh, sorry, no sound. You guys didn't hear me one bit. I thought this thing automatically unmuted me on my mic. I'm so sorry. I guess I'm gonna have to go through this all again. Okay. Okay, so you guys saw my mouse and wondering what the heck I was saying. All right, I'm gonna go right back to it. Yesterday, I posted this chart, and when I posted it, we were right here, somewhere around 2 o'clock. I don't know if you guys remember this chart, and I said I even cracked a joke, or I thought that I was cracking a joke. I said, a little voice in my head making me chart this and put it in front of you guys, so I'm gonna do it. Because this day like yesterday, okay, has several variations that sometimes it goes sideways, which we were going sideways. So I expected a little bit of, expansion, and then maybe the trap of the bulls, and then we would sell. That's one chart that I posted. Another chart was breakout chart like this. So I wanted to have that opportunity because I started to see, some good bear moves down. But my criteria generally, if I'm counting wedges with overshoots like that, I want to see bears break into this channel, okay, and come all the way down to this lower line, lower trend line. And if they cannot do that, you cannot assume that we're going to break this wedge or channel, whatever you call it at this point. It's a wedge, and we're never going to come down here. But if we do break it, and I even posted it could be like this, we could come down, break, retest, and then with a couple of legs come down here and bounce, but then it could continue to come down. So then I started to point out, look, we have only one bar, one single bar that's closed below that trend line, but we did not hang out. There are no consecutive bear bars. So obviously we're not coming down here. And then that trend line ends up being support. I ended up buying, and that's where I start to swing long and to profit there a little bit. And then as soon as this went up, I took profit and then left the runner. But at the end of the day, we came right back to it again, right? So this right here, right before the settlement, right before the maintenance hour began, this vertical line is actually 5 p.m. Eastern time. Futures get a 1 hour maintenance. If you have a large account, you can handle those overnight fees, they call it, because your discounted futures contract cost, say it's a $500, it ends up being a $12,000, something like that. Like you have to have that much amount for only one contract to hold it. Although it constantly changes, I don't know, every broker is different. But it used to be 3,000, ended up being 6,000, and now it's like a lot more. I don't know. I don't hold. That 1 hour is called maintenance hours. I do not hold open positions. I close it before 4:45 p.m. Eastern time. If I don't close my position, say I forgot, and if I don't close my position, it's still open, my broker will close it for me, okay, and then they're going to slap me with possibly for a $50 fee. So check with your broker to make sure you don't get those fees, because I've learned the hard way long ago. So, but right before that, we ended up closing again. So now we have 2 bars closing inside, and then finally we're breaking. So the overnight, we went sideways. You could see that there is a complex head and shoulders pattern extending, but really this support we broke. So we're making a bear flag. There you go, continuation, right? Another small bear flag, continuation. Now a bigger bear flag, 1, 2, 3. This is actually a wedge bear flag with a huge leg down, and a 1, 2, and 3 wedge, and it tries again. It makes actually double top, a higher high double top. So that's a major trend reversal right there. So wedge comes back down, overextends. You could call that the 4th push. Doesn't matter. Okay. So what you do is you're looking for now traps. You're looking to trap these bulls because their stops are here. You're basically going to sell into those stops with your stop up here. So they break into those stops, right? They come in, they start to run. I look for a bear flag and then sell again. So there you have it. We came very close to it. We could sell again, but I don't like this bar. This bar I don't like. So what does that mean? Well, bears keep selling this, but so they tried once, they tried twice. We couldn't even get to that. We couldn't even breach that body open. So bulls are trying to buy and go up here. So if this is too, sometimes this happens. Some people say, oh, because market made a lot of bear flags. No, that's not how you explain. Market has been selling. So it's been yes, those bear flags basically indication of market is selling. What you're supposed to say, okay, out loud, that this market has been selling. Okay, so it might be too low for bears to actually sell. So they're going to look to sell the pullbacks, maybe a small sell zone there, or it might continue to go up a little bit to this congestion zone, and it might actually sell from there instead. But if they cannot sell further, then they make a inverse right shoulder, left shoulder, head, right shoulder. And then you see these double tops. Mark those areas because that's where the bulls want to break out above. That's where you get those big surges, okay? That's where the institutions, instead of selling there, they put buy stop orders and they look for breakouts. So anyway, so the reason why this pullback is happening after a huge bear bar like that, it's because I think majority of the bears they see already market has been selling. They might think that this is too low to sell at the support because there's a big structure here, and this structure is actually a trading range. Do you want to sell at the bottom of a trading range? That's the biggest no-no, right? So you want to either sell at the 50%, look for a good sell place, maybe right there, okay, maybe right there. That would make it the 66%, and that's the 33% pullback. So market is deciding, do we want to get above the 33% and test the 50% and see if we can sell there? If we cannot sell it, then the bulls are going to take it to the 66%, possibly sell from there. So what if it reverses? Then that's fine. If it reverses, then I'm going to look for areas, possibly right there is a good resistance, okay? Right there, a good resistance. So we might actually end up going up here. So this is after hours, but I'm looking for continuation, and I'd like to see bears actually test right here. So that was the ETA chart. So the RTA chart yesterday, the regular trading hours, this is only showing the U.S. price action, 9:30 a.m. Eastern time to 4:15 p.m. There's no more halt. You can add more bars, so it would actually show you all the way to 5 o'clock, but since I don't care about that price action, I only look at 81 bars. I do not know why my bar counter, okay, here we go. Here's my bar counter. All right, so we have been in a trading range since Friday, Monday, Tuesday, Wednesday, right? And we have a gap up here. Now, bulls wanted to close that gap. What they saw here, okay, Tuesday we went, we came down, we tested the low of those, those days. We kind of expanded down. Now, if you actually put a line here, what do you see here? This is your trading range. We have an extension. When a trading range extends out like that, and then suddenly reverses and it's going to go up, measure this amount of breakout, put it right up here. That's the amount that you're going to get as a breakout. So if you're always wondering, like a day like yesterday, how much it's going to extend, well, that's your answer right there. So let's do this again. I'm going to mark that low. I'm going to mark that high. Okay? Just about maybe that right there. Okay, so how much of a breakout? That right there. So I'm going to take that, clone that. Let's see if I was actually right. So if I put it there, now that's one way. Or say I actually took this, that high, and that's, why am I taking that? Well, that kind of a wick. But you see, almost the amount of, it's not actual, but also you could say, the way that I do it, I don't take the wicks, I exclude those wicks. Okay? Just trying to get, there you go. So just about, almost, if you take the wicks. Exclude the wicks. When I'm taking my trading range, I try to exclude the wicks. In fact, I could do it here too. So that would be it. So that means then that's the amount of the breakout, just about, give or take. That's what you're going to get. Close, not bad. See? You're going to get this set up all the time, so you wonder, you know, when we get this much breakout, and if it's going to break out from there, chances are it's going to fake you out, but you can still get a feel of when it's going to reverse, okay? So, obviously trading range, expanding triangle also, right? And we ended up expanding from the downside and expanding from, maybe from the upside. So I could say maybe that right there. There's that. I can either take it that way or, see, we did not really come down here. So I'm trying to touch as many pushes as possible. But again, you know, expanding triangles, they're never the exact art, right? So it's not exact calculations. But with the trading range concept that I just showed you, you can actually see how much that extended here, and then you can kind of figure it out how much it's going to extend from the upside. Or if it went first upside and then it's coming down to extend from downside, then you can get your target. It's very difficult if you're putting trend lines. Sometimes we do not meet those trend lines. So anyway, so yesterday, and market made also a head and shoulders pattern in a way. I don't know if you guys see it. I kind of see it. But really, we opened up higher low at the low of this trading range, right? So we are right in that trading range. And I said we're in a trading range, but we're also in a smaller trading range. But market broke that structure, sold a little bit, didn't get any continuation. Then we have another structure, and look, it just broke out above that structure. Okay, so sentiment might be changing. Now, if the bears fail to break that structure, that means I'm going to look for new higher lows and then the test of that high and possibly, okay, break out. So I'm basically watching. This is what I'm looking at. We had a structure, we broke. Either you can take that or take that, doesn't matter. Okay, strong, but no continuation. Now there's another structure here. This time, bulls broke above it. So now I'm going to mark this area, and I'm going to see if actually bears are going to break that. Look what happened. Sometime in a 50% area, we ended up getting support. And I'm looking for 1, 2, 3 wedge bull flag. Okay, this is good. Now I'm going to look to see if there are strong bull bodies bouncing from this 50% line. Yep, bar 75. So now I'm targeting, I want to see if the bulls can actually go there and finally break above it. If they do, we're going to get higher prices. And chances are, these are the bars we're going to go test. And I walk you guys through it. during that live session is, why those bars were important, so you can go watch the replays. So bulls did break, but it took a while, okay? So here we go. We have wedge 1, 2, 3, and they're trying to sell the wedge, but a bar like 8 is not getting any continuation. And I see bar 9. That's right there is a double bottom at the EMA, okay? And it's a second leg failure, okay? And also this bear flag, wedge bear flag, also failed because it's actually a bull flag, okay? Some machines will see different patterns. Some people will see different patterns. I try to find patterns for both sides and try to see which one's failing, because one is failing, the other one is going to take over. So I see the bull flag, but I also see a bear wedge flag. But look at that. If this is bear, move down, how come this such big bear bar, bigger than any of these bars in this two-legged move down, not getting any continuation? That right there took me off. And then you get this bar 3. Okay, that's it. So we had buyers were right there above bar 2, which I said, but it's not getting any continuation. No bull bars, strong bull bars breaking that bar 64 high. That's the structure top I'm interested. So I'm going to wait. I'm still going to look for failures for bears at or underneath the EMA, which we just got it. Then you can say, okay, you know what? I'm going to buy this. This is becoming bullish now, and bulls are really trying to break out. You can buy above that. You can buy above that, or wait for a breakout bar. That's it. Just buy it. Don't even look back. Just buy it. Okay? So we're going to overlap with that bar, which we did. And not only we took profit with bar 13, 14, we're making new highs now, right? We have higher low, and we're making new highs. So obviously, those bulls machines might have bought down here the day before or here. They're moving their stops. As they move their stops, that means we're in a swing, okay? So now I'm looking for maybe that, or really I'm interested in bar 20 overlap. Look, bar 16 tests the bar 20, but it cannot overlap. It comes down with pullbacks, but look at the pullbacks. Pullbacks are so very weak, okay? So that means we're in a bull trend, and a leg like this, even though it goes sideways, okay, it's maintaining some kind of a gap there, okay? So, and we have a gap right here, so the bulls are maintaining those gaps. Most likely it's going to break out, and what they're trying to do is, I said, they're probably trying to get above and test what's above bar 20, and that's exactly what they did. Look, we got a leg, same amount measured move. Or you could say, hey, this is a cup and handle, which I said, I warned you guys. So that means these double tops, bulls are trying to break those double tops. You can kind of get your measured move target, okay, from there to there, which we met that. But they were still going up, so there's obviously a much bigger structure, maybe that right there, okay? And we met that as well. So, but at this point, I'm counting, market is printing nested wedges, maybe 1, 2, and 3, with overshoot. We couldn't even touch it. Or you could say 1, 2, 3, we came down a little bit, or 1, 2, and 3. So and so. Or you could say, listen, we went up, we actually broke out, so this is strong of a move that maybe the count begins again. That's fine. 1, 2, 3, we come down, but we're having a hard time tagging the EMA. When sometime around bar 40, okay, bar 35 to bar 40, and this is how I gauge it, because I've seen this happen so many times. If market is having a hard time coming down to the EMA, and the bulls are keeping that EMA open, that means sometime after bar 50, okay, we're going to test. Because sometime between 2 o'clock, okay, and 2:30, we get a reversal when that happens. Bulls are extending, and I look for reversals, and sometime around 2 o'clock is around bar 40, 45. Okay, so look at the reversal. Look, Bears try to come down, failed, and reversal began again. It's really not a reversal at this point, it's a continuation, but according to this two-legged move or three-legged move, this is actually a reversal, right? Because this wedge is failing to sell, so it's reversing back up again, okay? So now another way to read it is go back to Al Brooks' teachings. When market is bullish like this, or bearish, but let's talk about what's in front of us. When market is bullish like this, and we have a first test, you're going to get no matter what. There was one user actually posted, he said the same thing. I think we're going to bounce at the EMA right away. And we did, he was right. We kind of expected it, but because we had so many bear bars, I kind of expected for underneath the EMA to be tested. When price starts to move underneath an EMA and it fails to get gap bars, okay, gap bars are separating from the EMA and selling, chances are we're not going to sell, especially if there's some kind of a gap in the vicinity. Gap, also support or breakout point, okay. What I look for is about 3 to 4 bar closes. Doesn't matter how they close. Bearish is fine, but it could be bull closes too. As long as there are 3 to 4 bar closing underneath the EMA, and then we're finally getting bull bars closing above the EMA, I'm going to look for some kind of double bottom and I'm going to sell. The only problem that I had buying these right here is this, okay, that bar 52s. And if you go back to the Discord comments after I ended the session, I actually posted there and I said, I'm a little bit skeptical about bulls or going long with bar 54, 55, 56, even though 3 bull bars, they're kind of putting some kind of momentum. I am skeptical about the bar 52 and not being able to get above or printing a bull bar above it. And I said, I'm going to wait. If I'm going to buy this, I'm going to wait. I want to see a second entry, stronger, long entry attempt by bulls. And I said, I'm going to count, and I kept posting, I'm going to count 4 bars closing underneath the EMA. 1, 2, 3, okay. This didn't close below. 4, okay, and that's it. So 52, 53, 54, and 59 are 4 bars closing. Bar 60 closed above EMA. Then we get bar 60. So what I can do is I can buy 1 tick above and put my stop right there. So I'm going to go, that's enough space to go for a 1-to-1 just to test the waters to see if market is going to give me a 1-to-1. Because if market cannot give you 1-to-1, it's not going to give you 2-to-1. This can actually fail and just come right down with a bear flag. That's one of the, it was one of the options. But no, we had a really nice close. We're breaching the top of that structure now. And also another double top here. We're breaching. That's good. So most likely when you see 3 strong bull bars like that, 60, 61, 62, pullbacks, you can buy with a limit order, the pullback at the EMA. So if you're long and price comes down, your stop is somewhere there, just buy again, okay? It's probably going to go test the high even if it fails from there. If market is going to make a 1, 2, 3 push bear flag, and you're disappointed because you didn't take profit here, but your stop is here because you bought somewhere here, and the price is coming down to EMA, just buy at the EMA. Add to your position, okay? Then scalp because you didn't take opportunity. You didn't take the opportunity the market gave you right there with 3 bars, okay? Now scalp and see if the bulls actually break above it. That means your second entry, okay, from here is going to make money. But if the bears have it in store, some kind of a bear flag, and they're going to sell it, you already made money, okay? So you can actually exit out, or you can put that stop right underneath here. As it comes down, you lose no money whatsoever. Or your runner may not run, but that's all you're losing. A couple of ticks, maybe a point, but that's about it. That point comes out of your earlier scalp, so you lose nothing. You probably walk away with money. So use the EMA to your advantage. Okay, so that's when I try to add most of the time to my losing position. And the market actually started to swing again, 1, 2, 3 wedge, or another one, 1, 2, 3 wedge. And I kept saying, we're going to reverse. And I said, when the price was up here, we're going to end up closing at the EMA today, because this is a classic bull day, closes at the EMA. And that's what we did. Anyway, so let's see. This is my Globex session. We are way below the Asia. We have a double bottom. I need to fix that. That's the Globex low. If we do swing higher, 37.28.25 is my target. Now, bulls are trying to reach on the hourly. They already reached the, oh no, I think my graphic card is struggling again. Bulls actually reached the 33% of last week's, okay, range. I was really hoping that we would get there a lot earlier. I think maybe there, I was hoping, but that didn't happen. We ended up selling, and we're now there. Now we reversed from there, okay? So we're back inside this trading range yet again. And we're at the 50% of yesterday's bull run. So this is not good. My graphic card is completely froze the application. So just give me a second. I'm going to try to fix that. I'm not running anything. I don't know why this is happening. I'm not overloading the let's see if I can fix it. If I cannot fix it, I'll just relaunch the application. Yeah, something's but I'm also running the heater. Yeah, I think the computer is heating up a lot. So I'm running a heater. It's gotten cold here. Okay, so we're closer to the Globex low now. We're bearish, but how bearish are we? The first hour is bearish, so we gap down. That's the open of the week. And you can see on the daily, okay, we had a huge, when you're buying against a bear channel like that, the first reversal is probably minor. Okay, so you're going to get some kind of rejection, but we have inside, outside, and inside now. So you see that? That is a breakout mode. Now, can the bears actually break this out by breaking this low right there, the June low, June 17 low, with a bear body? If they do that, and if they close a bear bar like this, they might look for a huge measured move down. Oh, that would be catastrophic. That would bring us all the way down to the 3,000 maybe. Okay, I don't know. That would be bad. Ooh, 26.62.25. I don't even want to look at that. Forget I did that. I do not want to see that. So let's see how today actually closes, because if we do go close this higher, and today is actually a bullish day, we could continue to go up at least to these highs and maybe right here. Bears are still going to look for some kind of opportunity to sell this as we go up. But my only problem was going up, and it was nice yesterday. It's just that we're going against something that is very, very bearish. Now, for bulls, we're buying at the low of a trading range. That is a good thing. So even though we look like we're selling right now at the open, this might actually change and we could still become bullish. So we have a smaller trading range, okay? We might actually go beyond that and test that moving average, maybe get back in between those two moving averages. Now, I don't know yet. All I know is on the smaller time frames like 15 and the 5, we gap down, and we are again, somewhere around 50% of this trading range. There is a gap here, the bullish gap, that could stop bears in their tracks, but we might come all the way up to bar 64 high before we reverse, before we're reversing. So 36.73 might be a target, especially if we end up getting two strong bear bars at the open. That creates a trend from the open for bears. So what does that mean? That means they're going to try to sell into 36.73, might even try to sell further into this congestion zone, which this tight trading range area squeezes a little bit more. So there's right there is an area of interest, just about. Okay. Yep, there's something going on. I'm going to try to save my workspace more frequently. Okay, so if we do get a trend from the open, okay, I would expect for, first I would want to see bar 2 to close on its low with a strong bear body. I don't want this to overlap, obviously, but it could. So the bar hasn't closed yet. We don't know. I'm just running scenarios. And I no longer need to do that. So we would close around 36.73 and then continue to come down to low of yesterday, possibly. Well, let's just wait. So we had news. It's still econ week. Jobless claims and GDP came out in 8:30, and I said we're probably going to get reaction to that at the open, which we are getting that. Now the rest of the day, nothing. Oh, well, 1 o'clock, another Fed member is going to speak. But other than that, it's just a bunch of bill auctions that might affect the S&P. But really, until 1 o'clock, nothing. We just have to watch what happens 1 o'clock. And tomorrow is a big day. You have personal income outlay 8:30. And then slew of Fed members speaking starting at 8:30 into 9 o'clock and 1 o'clock. And then you have Chicago PMI. It's a big deal. Consumer sentiment. So 9:45 and 10 a.m. is a big deal tomorrow. So so we continue to 36.73. Never mind. Looking to see if we're going to bounce at 36.75 before the 73, but because ATR is 15 points, goodness, we're probably going to overshoot that target 36.73 and tag 75. I'm looking to see bears to test the 75, 36.75. I'm sorry, overshoot 75 and actually test 36.73. I said it the other way, I'm sorry. So we should be able to test. And underneath 75, 36.75, I'd like to see bears go and test that where I marked. And they could continue into that area of interest. Area of interest, I use yellow. For gaps, I use white. Okay. For supply and demand zones, for demand zones, I use green. Support, I use blue. Supply zones, I use purple. Resistance, I use red. Okay, my target met, and I just scalped there just in case. Now they're trying to reach the area of interest, but everybody else scalping. See, it's important. That's why I scalped it. I said we're going to overshoot 75 and we're going to hit my target. Why did we just stop right there? That's because I'm taking profit. So machines know that I'm taking profit. They're taking profit. No, I'm just kidding. Because I know machines are they're going to take profit before continuing down. I take profit with them. ATR, I use 4. I look back 4 bars, but you can use 5 or 6, but no more than 6. Okay, I'm going to get rid of this now. I no longer am interested. That was just a target. Low of yesterday is nearby. We are breaking from below Globex low, but just watch out. I marked earlier pre-market that this 36.64, it should be 50 around it, is an important area along with that red line. Okay, so I think we're trying to test that. Okay, so we should continue to come down, and that happens to be right around where my area of interest. So at this point, your runner should be running. Okay, so you shouldn't be opening a brand new position and going short, because if you did not short up here with bar 2 close, you're kind of risking, because I don't know if we're going to get down here. But by looking at my higher time frame, we have a little bit of room. The only problem here is that we're testing a support area already. Now, I think the bears are going to still move this, but at this point, like I said earlier, if bar 1 and bar 2 are strong bear closes, we're going to get some kind of a trend at the open. You should have sold already when the price was closer to where you could put your stop. Okay, so if you're opening a trade here with E-mini, don't do that. If I feel like I am opening a trade in the middle of nowhere or far from my possible stop, or where actually other traders open and they're about to scalp, I actually switch to micros and I try to trade the micros, because if I'm going to lose, I want to lose small. That's my whole thing. All right, so we should get continuation for the runner into that area of interest, but we're going to bounce. Remember, area of interest is like supply and demand zones. They get tested twice. We had that yesterday. Now, when they are broken, then I treat them as they are support and resistance. Okay? Support and resistance are meant for, they are basically, expect for them to get, broken. So expect for them to break easily. Okay, price to break them easily. Now, supply and demand is different. Supply and demand, you expect, if it's a supply, high amount of selling twice, okay, before it actually breaks and becomes a support. Demand is the same. Expect twice test and twice bounce. One of them ends up always being a good swing long. All right, so here we go. We are testing, so your runner is making money, but we're also testing this area, kind of the low of that trading range. Okay, so now if I actually put I'll put this right there. Is price trying to come down here? Most likely, but look at it. Look where we are. Now, you tell me if this wasn't accurate. I posted this yesterday, and I said we're probably going to sell again. And what did I say? What did I say at the pre-market? If you're having this double bottom and a bar like this, having a hard time selling, it's because this is probably too low, but not necessarily. We're reversing. We're going to go up to that sell zone. What is that? That's actually a supply zone. And we tested once, and we tested twice, and that's your swing short. I gave you the hints earlier, and I said we're going to come down here. We're going to bounce here because that happens to be my area of interest. There's another one right here that I didn't mark. You see that area? So that we might be actually extended, but this is suffice. So I'm fine with that. Now, if we do break this, it becomes a resistance. So if bears break that, then I would look for a pullback and then continue to sell down. But we're going to bounce either way. I just put this haphazardly there, but it could be like this. In fact, it could be a much larger area of interest, and that would puts us smack in the middle of it. Okay. Look at that. Smack in the middle, they're testing. And bouncing. So if you wonder why they're taking profit, that's because we have a double-decker area of interest, and I always pay attention to the 50% or the top or the bottom. Now, if we continue to sell after this attempt to make a quick bear flag, I'm interested in this area, okay? Just trying to see how far we can go. Because if we broke this, I'm no longer interested in that, but I am interested in this area now, which it bounced before it was support, so bulls are probably in this vicinity. But on the weekly chart, I said all along, this is the area of interest that I've always been interested, even though we had a wedge here and we bounced, okay? And I said, look, if you're going to sell, sell from this trend line. And 2 legs down, right into that. So can we still continue to sell and actually test this moving average? That's what I'm thinking that bears, I think, want to do, but I don't know. So, but we are so close to it. So now they're bouncing from the first test, but I think we're going to end up coming in. So the 50% of this area of interest, right around there, 91, 75, 92. But I think if we do get there, we're probably going to test that moving average. It's possible. But let's just see. And then also on the weekly, you know, I keep repeating myself every day. I never remove this. I still think that the bears are trying to reach that moving average and also the measured move target down. But that's kind of far away. That's 34.55, I think. That's 200 points away. So let's hope that we don't dump 200 points today and tomorrow. But if we do, buyers are waiting eagerly down there to buy. And they might have already started buying this whole area. But remember what Elliot was saying before his trip, even the last live session that he did, he said as price goes down, and he actually wants price to go down because then he can buy very low as, you know, when S&P starts to mark up again, he's going to be making a lot of money. So I'm sure he's getting excited about this dump. So I think the hourly bears are going to continue to sell this. So on the hourly chart, we still have 39 minutes for hour to end. So can we sell until 10:30? Sure. They're taking profit here because this was a balance zone and an epicenter of balance zone where I marked. It's kind of important. Take profit and see what happens. Can we bounce here kind of area? And we've gotten very close to the low of yesterday. Now, low of yesterday, which sometimes we come so close to it and we don't tag it with like a couple of ticks. And if you're wondering why, it's because of that 50% epicenter of that area of interest. So, can we come back and finish the job? Sure. I mean, look at this. 2 bars, now a third bar. We have already a bear pressure here, which is gap, bear gap. So 50% of that bar 3, sellers might be waiting there. I think we might end up coming down here, but I'm going to see what happens here because it's also low enough. It could be low enough for bulls to buy, but I don't want to go against 3 bear bars like that. So I'm not going to take any chance here going long. And I think we might end up coming down and testing 36.50. I'm not interested in buying here just yet. I want to see some kind of a wedge form, maybe 1, pull back 2, or 1, pull back 2, pull back 3, okay? Or some kind of a double bottom, but since this is strong, it's probably a wedge. So if I actually go to maybe 3 minutes, I can't see it, so I'm going to go to 2 minutes. See that? 1, pull back, 2, pull back. We might come back down one more time and then maybe go up. But even if we go up, we're still going against, okay, a strong bear pressure. Bulls want to reverse this for sure. They might see that this is really good enough. You know, let's just reverse because we're testing the June low, but I don't know. Price is probably going to pull down to 36.50 area, 52.50, maybe even 45, if not more, before even trying to rotate back up. I think I'm going to wait for that. Now, if they do decide to reverse this with a V-shaped recovery, sure, then I'll look for a really strong bull bars closing on their mid and high levels. But I don't see it. There's only one bar after a strong leg like that. Limit order sellers will sell the close, the wick, or maybe even more sell orders above the wick. So limit order machines already sold that wick and scalped towards the 50% of that bull bars range. So so they're trying to get, I guess, low 1 and sell. So there might be sell orders actually parked underneath that bar 5 and 4. And if this bar continues to go down, those bears will get activated and they're going to try to grab a point and then they're going to leave a runner. Now, if this bar 6 closes like this before breaching the bar 5 low, you move that stop order, sell stop order 1 tick underneath bar 6. They're probably going to activate those sellers and then continue coming down to 50 area possibly, 36.50. So they just tested. I'm doing this on a micro, but on the micro I see that bar 6 actually tested the low of bar 5, but not on ES. But it didn't really fill me. I was 1 tick below that bar 5 on micro. Bulls want a micro double bottom with bar 4 and reverse back up. So bears are going to see if they can actually scalp a 1 point here. Now, those sell stop orders did not get activated, so everybody's safe here trying to sell. They can actually scalp a 1 point here. Now, those sell stop orders did not get activated, so everybody's safe here trying to sell. Whether you're doing this on ES or MES, you're still safe. Nothing has been activated. So now bulls are looking, is this a micro double bottom? I don't think so. MES is like, I'm just going to go keep test that low of bar 5 and not going to fail you. Yep, so you have outside, inside, bar 5 outside on the ES and inside, inside. Some kind of breakout coming up. Can they trap the bulls here? bulls need a double bottom. So I'm short, and I scalped. That was really nice. I just made 50 bucks with 2 micros, and I made another 50, so I'm 100. That's really good. So I just traded twice, and I have $100. And it was super fast. And all with micros. $100 a day keeps the day job away. That's what they say. I know it's nothing, but if you can do this on micros, you can do this on, So what did I do there? Those of you wondering what I did, I'm going to demonstrate real quickly, even though I did, but I'm going to explain it right here. Okay. So basically, I see this, right? This leg down. I know we're bearish. And I already see the limit order market bears already sold. So that was a good indication. Selling that lonely bull soldier, that's what I call. Okay, they're going to sell it. This has no power to go against or reverse this in a V-shaped recovery because they already start to sell. So what I've done, I want to sell with sell stop. Why? Because Al says use the stop orders. If you're a new trader, try to use the stop orders. Stay away from the limit orders. I'm not a new trader, but I assume many of you guys are. So I said, where would I put my stop order? Right underneath, one tick underneath, okay, bar 5 as bar 6 is happening. I'm not going to move it underneath bar 6 if bar 6 is not yet closed. It's going to be underneath bar 5, only one tick away. As soon as bar 6 closed right there, I'm going to take it, I'm going to put it right underneath bar 6, one tick below, so I'm going to get filled 56 at 56. As this bar comes down, okay, immediately fills me. I am going to have an exit order at 54.75. I'm going to grab a couple of contracts, okay. Say I got in with 10 contracts, okay. I'm going to take out maybe 8 contracts. And I'm going to have a runner, 2 contracts running, as long as it runs. Then I'm going to take my stop, okay. Sorry. Then I'm going to take my stop. Say it was, I don't know, where did I sell it? So I sold right there. Maybe my stop is above that bar, okay? But then that means I'm looking for a 1-to-1 at least. So if I sold here for my runner, I'm looking for a 1-to-1. I already got it. So what you can do is, since you make that, okay, since you made that 1 point and the price came down here, take that stop. Oops, sorry. Take that stop, especially if it goes beyond your 1-to-1, 0.5 risk reward, okay? Take that stop and put it right there or put it right underneath, maybe make another $100, okay? If this goes right back up and fills you still make with your runner 100 bucks, okay? Now it's actually breaching 1, so I'm going to go for 1.5 risk reward. That's right there. And I'm going to keep moving this stop, okay? Maybe another 2 points, maybe all the way to the 50%, just in case if it hits 1.5 risk reward and just goes right back up. So this way, I still make a ton of money there if you're using stops, obviously. So that was really good. Okay, so say my stop is right there. Or what you can do is just leave it where you entered, maybe 1 tick below. Okay, but you're taking a chance of not making any money with your runner. Maybe just the break-even +1 means break-even price, and it's just 1 tick below your stop is positioned, so you're trying to make it $12.50 with if you have only 1 contract running. If you have 2 contracts running, you end up walking away with $25, which covers your losses and commissions for that contract or contracts. Now, if we end up selling more and this becomes the lower high, then you take that stop and you put it right above that bar. If this bar closes like this, okay, I may not even wait for the next bar to close down here. I might just move it right above it. So this way I'm maximizing my runner. Okay, so still running. it could actually end up coming down to 36.38 area, 36.38, 36.37, maybe even 35. But if I were to move that stop before this bar closed, I'm running into a quick runoff. Like they can run me off. They can kick me out of my position. So it's better to leave it up here, maybe one tick below your entry price, and wait for this bar to close. Because it has a potential of coming down a little bit maybe. But if you're scared that this is going to end up closing up here, then that's fine. Maximize your profit taking and move it above while this bar is still progressing. I don't do that. That's just premature, I think. I used to do that. I kind of grow out of doing that. And that takes time and process, a lot of screen time, okay? So once you get used to how these bars move, you kind of don't do those, jerky moves like, oh, I'm just going to move it, and then you're kicked out, and then it goes into the same direction, and you left all that money on the table. Now, if this bar actually does close up here, I might either hit close or quickly move that stop above it. Okay, if it closed that body up there, so it might end up going further up, and I really don't want to give back more. So I might actually move it very quickly up there. It really very personal. That's why they say stops are personal. It's all about, maximizing your profit taking. You decide how much you want to get paid. We cannot dictate that, especially if you're scalping. But for swinging, you're still in a swing. You just want to wait for this bar to close. Then you can use that area as high, lower high. Wait for this bar to close. Then you can use that area as high, lower high. So that's 1.5. Okay, from where I entered. But it can go to 2-to-1, which is down here. But if bears actually close a bear bar underneath 40.75, then 2-to-1 is going to be doable. So that's why I go 1, 1.5, 2, 2.5. I want to see those half areas, because when price is not going to go to a risk reward price level, okay, sometimes it reverses right in half area. 1.5, 2.5, 3.5, 0.5. That's when you know you're not going to get any move with your sell. If you cannot even get to the 1 point and it actually reverses. Okay, so here we go. If they do close that body down here, that's good. That means I'm going to adjust my risk reward to 2-to-1. Sometimes I stutter. I don't know why. Either I'm too excited or it's the coffee. So here we go. But I need that bar to close, right? So that's 1.5. So here we go. But I need that bar to close, right? So that's 1.5. But you see how they're taking even profit at the 1.5? But my stop is now up here. Maybe one tick above that high. I want to see this bar actually close below 1.5 risk reward. If it doesn't, then that's it. This is all we're getting, and this could go up. This area is support, like I said. But why is it support? Can it be actually broken? Yes. You see right here? We went long right there. Market actually made a head and shoulders pattern and then ended up making higher lows and start to swing up. And this is actually the actual area that we broke second time that structure. okay? So we know there are a ton of buyers here, but I think market is trying to get down here. This is what I'm interested, okay? So we have a potential of continue to come down. This is where I want the swing, okay? And this is why I'm waiting for, what time is it? 10:30, first hour. So I said we would probably sell into the end of the first hour. So that area I marked pre-market before I started the live session. I do this exercise every morning after my first coffee. So we could continue to sell into that area. Yeah, be careful on that ladder that you're climbing, Brent. Have a safe day. Enjoy. All right, so I need the bear close. Then I'm going to adjust my risk reward to 2-to-1. When would I give up? Well, micro double bottoms or strong bull bars with micro double bottoms would entice me to maybe get out of my position or tighten the stop. I'm going to tighten the stop as soon as this closes down here or closes anywhere here. Doesn't matter. Stop, it's going to trail down above that bar. What bar is that? Bar 9. But for my runner, I still want to get the 2-to-1 for this entry. Now, what is my bigger? Now, look at that. So we have broken below that target. So many bears actually took profit there, hence the pullback. But they're still selling. Where can they go? All the way down here, they can actually sell. But I'm more interested of this. We could bounce right here, everyone. So just be careful. Let me get that a little bit more. Yep, right there. So 32.75, we could actually bounce there heavily. All right, so here, let me measure that 2-to-1. We're just about there. Your stop now should be trailed down one tick above that bar, 9. That's it. We just got the 2-to-1. So what you can do is if you have 2 runners, take one off and you have only one left. And see if we can continue to sell this into this area with a final runner. But be prepared. This is 2-to-1. We can end up going right back up. So what I'm going to do now, I'm going to adjust this 2.5 and see if we can get down here. My stop trailed. And I'm also looking at what I found on the ETH with Wolfie waves or the bigger wedge structure with an overshoot. 32.75 is still my target, which is a little bit above than 2.5. So now what we can do is we can actually hit that, come back to the 2.5, and put a huge wick if we're not going to go to 3-to-1. But on the RTH, I do have a expanding triangle lower trend line, target line. Now, I also need to pay attention to this support, okay, and wait a minute, that's not support, that was supply, support is that. So if we do break this support, then we're coming down to my 2.5, okay, but this is what I'm interested, 32.75. We could overshoot it because ATR is 10.5. But look at that. Now, if you're worried, what you can do is you can take that stop, put it right there, because there will be possibly a bounce there. Okay? You could do that, tighten that stop now. We have not hit the 2.5 yet. We just missed it. We just missed it with one tick. So when I see that one tick miss, I trail that stop right away, and I don't care if it kicks me out. I'm fine because we were at a support level and we're overshooting. I don't know if we're going to get down here. Sometimes expanding triangles end up reversing right around that support without touching. So if it kicks me out, it just kicked, no, it hasn't kicked me out because, oh no, it did kick me out because that was the high of that bar. So I'm out. But I banked from there to there, just about 16 points, a little bit more than 16 points, 16 points and 2 quarters. So, hey. Now you're wondering, but Rose, you got out so early. What if this goes to 4-to-1? Well, I don't know. I don't know if this is going to go to 4-to-1. I don't work that way. I do not function that way. I look at my levels and check that out. Have I not said that we're going to bounce there? I did, didn't I? So I was right. So I was right to take profit or get jittery there and tighten my stop. That's okay. I can sell more if I wanted to. But how would I enter short again? Well, I would want to see a bear bar closing below the 30.75. Then I would look for 3-to-1. That could still give me more money for what I left on the table. But I'm opening a new position. There is that. You're kind of at the end of your trend. You don't know if it's going to keep going down. You know, now is the time. You take your money. You just go for a walk, get some coffee, get some tea, you know, pat the dog, walk the cat. I don't know. You know, just you made money. You're good. Okay. So hopefully this was helpful and you learned something. But if I waited for actually bar 10 to close, my stop would be there. Okay. Anyway, so I'm no longer interested in this area of interest. We could still bounce. Now your stop would be hit. See, the support is still holding. It's kind of important area, and that's one of the reasons why, you know, I would have gone out of my position. I would exit out of my position. That's where we break down. So this becomes resistance, 36.54. Can we go up there and test it? I don't know. That's not what I'm interested in. You can have that line on your chart, but for bears, I'm interested in that. And a little bit down, the bottom of the low of bar 4. So I'm going to mark that. Bulls eventually will get up here. So that's it. That's the 54. So we're going to eventually go up here, and we're going to try to sell this twice, this area. As long as I see that this support is holding. Can we sell earlier? Sure, we can sell earlier because I said, basically I'm looking for a wedge. So here is first pullback, second leg, second pullback. I'm looking for a third leg down. So if we do break this support, we can come down here, then I'm going to get rid of it. Remember, support and resistance, they're to be broken, okay? But this is where I want to sell when price gets up there. Sure, you know, we don't have to go through this color thingy. I'm a very visual person because I worked in an ad agency for decades, years, and graphics and web graphics and development and all that, and then marketing. So I like to color code everything. It just makes sense to me. I react faster, but you don't have to. We could call them all sell zones and buy zones. But I want to point out the difference between a really good strong sell zone versus resistance. And that's why I kind of color code. And I want you guys to understand why I look for a strong sell here, then just sell once and then go higher. So I use purple for if I identify a location as a supply, whether it's a micro or macro. And I use green for demand. I use red for resistance and blue for support. I use white for gaps and yellow for area of interest. So now, can I swing here? The early bulls will, because they do see already a opportunity. They might have actually put their buy stop orders one tick above bar 11, and then they're going to trail it down as soon as this bar closes. But I'm not ready to buy it because I do think that even if it's a small leg, I think the bears are going to try for that third leg down to finish this possible parabolic wedge. So I do use ATR for two things, actually three things. One, the number one thing is the volatility in the market at that point of time on the chart. It tells me how fast and how much the bars can move up and down in points. Okay, so in this case, it's 9 points. 41 means 9 points 25. 9 points an extra tick. Okay, it can move. So basically, that would be 46 ticks, right? So, yeah. Wait, no. 60? Yeah, do the math. So it's 4 ticks times 9, 37. So I don't do the tick calculations. I just look at points. That's what these are points here. So 55. There's 5 points in between, and then 2 points in between, and then 1 point. So you can count. You can put lines here and count those. But it's telling me that these bars are going to move up. Okay, it's up and down. How many points it's going to go. Now the second is my stop placement. Generally, when I'm looking at the ATR, for tight conditions, I do use one time the ATR. So if ATR is telling me 1035, that means you can put your stop maybe 10 points, and that's 10 and 25. So maybe 1050 or 11 points. You can put your stop 11 points away. Now, when ATR is that big, one has to ask themselves, can I afford 10 points of risk? Because stop means risk. So if you're actually going short, say you went short, right, and some haphazard area that you didn't listen to me, if you really wanted to go short, you wanted to put a sell stop order underneath, but this bar never filled you, so you're safe. Instead, it's going up 10 points. But say you actually sold here, okay, and you're wondering if you can actually get a 10 points to downside, and your stop has to be maybe 10 points, 11 points above, right? So you can adjust that. You can do the math that way. Or if I'm scalping, okay, so say I sold, and say I sold right here, like price came down, went back up, and then came back down here. So that area, when price gets up, I'm going to put a limit order sell. And if I get filled, if this is 1045, that's actually 1025. Okay? What is the health of it? Well, I can't really calculate 25 health, so the health is 5. So what I'm going to do is, say I sold with a limit order right there. Okay? This is my limit order entry. Okay? So market is telling me it can move 10 points and extra ticks. The half of that is 5 points. I'm going to scalp it. 5 points away. 5 points away from 36, 45, 25 is 40, 25. So I have scalped right there. And I have a runner okay? I have a runner, okay? Now it's probably looking to go. Now it came down from 10 to 873, that's 8.5. So now calculate from here where you entered 8.5. 73 is not 75, but now 85 is 75. So here. So your exit, your runner, if you're going for a 1-to-1 ATR, that's your ultimate exit out position. That's where you're completely scalping. Now it's 9. Maybe I can get a 9 out of this. Now it's 925. So adjust your exit out, right? Exit. Move it down. Look at that. That's 950. It's going to feel you, right? You're going to be out. You're going to be making a lot of money. So it kind of did. So 975. So that's 975. I don't really go 1-to-1. I try to extract one tick out. You see how it's going, like right there? That was my runner running. Now you can actually get 1.5 the ATR or 2 times the ATR if you see good move down and as maybe a magnet down here. And when you do the math, actually 2 times to ATR is somewhere there. So you can actually run your runner towards that and then trail your stop. Trail your stop, okay, until it hits your stop. Then you maximize your runner and you already made a ton of money. So that's how I use ATR. Does it make sense, or did I confuse the heck out of you? Good. I do a lot of math. I mean, sometimes when I'm tired, I mean, for the life of me, I cannot figure out what is 4 times 9. And you're going to get this. And that's my senior moment right there. I'm like, what's going on? I probably popped the gray hair trying to figure out what 4 times 9 is. Because price is moving. I have a runner. I need to move into a position. I need to run that stop. So there are a lot of things, moving parts happening. Scalping is hard. But that's where you make the quickest money and you walk away. So for that reason, make sure you have a calculator. When you have a moment like that, what the heck is 4 times 9? I can't even trade myself out of a paper bag. And here, just use your calculator, okay? That'll help you consume time trying to figure out the calculations, the math. But that's how you do it. So ATR, since you entered here, ATR is 998, so 975, right? 1 time the ATR, 975. Look at that. Look at that. Not only you scalp, they gave you extra tick, okay? Extra 2 ticks to exit out. Actually, I'm wrong there, sorry. You entered right there. They gave you extra tick, right? I mean, isn't this great? This is how accurate ATR is. I do not go for 2 times the ATR unless I do see strong move. Now, this move is no longer strong because it already moved so much, okay? Now, I would have gone 2 times the ATR if I were to enter early on, okay? But that's about it. This is how I scalp. I'm more of a 1 time ATR kind of gal. Alexa, what is 4 times 9? Please, hurry. I'm just kidding, but you know, you got the point. So this support is still holding, by the way. I don't know if you guys have noticed. Now, I want to check something on the ETH chart. So tell me if I was accurate here. I said we're probably going to continue down, and we did. And we're still bouncing from there, right? But if we do break this, then we're going to continue down to that. And then furthermore, if we break this level, that means we have to break this support, and then this becomes the projected target on the RTH chart. Now, we do have wedge. In fact, we have 4 pushes, 1, 2, 3, and 4. Now, the problem here is that this area, there's a reason why I use this fib levels on the higher time frames. This is a trap area. But if we do break that line, this is where we're going. So we can extend this move down. We might even get a measured move on the 1 hour chart for bears. Okay. So here is another one, right? So let's do another exercise. Price came down here, broke down, went back up, sold a little bit, came back down. Maybe you put a sell order right there. Was that the one that I was measuring? Anyway, so say you sold again there and you're trying to go with the ATR. Okay. That's the one I did, I think. But anyway, so, but this right here, I would not, now I would look to buy. Okay, so say I want to go long. Price came down here, bounced, came down here, not able to break. But you have to wait for that bar. You have to wait. Early buyers will buy it, but I wouldn't. I would wait for some kind of sign that this area is holding for bulls. So I would look for a bull bar, okay? And then I would try to get in and then calculate the ATR and see if I can scalp. But since market is bearish, it's still trying to make the third push down. I don't see this area yet proven itself as a good support. I can't really jump in. But if you do jump in early, that's what you're assuming. You buy there, your stop is here, or whatever the ATR, okay? Or maybe 2 times the ATR. Generally, if ATR is sometime around like between 3 to 5, I can go for 2 times the ATR. But if it's more than that, I'm not doing that. That has to be 1 time the ATR. I'm not willing to lose 20 points or 10, 12 points. So you just have to practice. Don't go against the price. Obviously, we're bearish, right? Just 2 bars, 11 and 12 is not good enough for me to think of buying around here. Some limit order buyers did buy underneath because 2 bars, both of them closing, one of them closing a little bit higher than its midpoint. This one closed on its midpoint. So chances are you're not going to go too far with your scalp. But say you entered 1 tick below right there. Say you entered with limit order. ATR at that time, okay, was this bar. So you filled with this bar. So it was around 925. I'm sorry, 923. That's not 925, so roll it down to 9. 4.5. Okay. Did I get half the ATR? Yep, I did. Look, ATR was 4.5. So you would scalp right there. 4.5. That's your first scalp. And then you would put your stop from underneath 10 into right maybe 1 tick above the break even. So if your runner doesn't run, you're kicked out, but you made a 4.5, probably extra tick to cover your runner's failure so you can pay the commissions for that. But it worked, right? Even for the limit order buyers. If you didn't move your stop from under 10 to the break even where you entered at 34, your runner is still running. You're hoping that this is going to go up to that neckline and then break out eventually. Let me read some questions here. Sorry, I missed. What do you think about using smaller time frames like 1 minute, 2 minute for better entries, even with limit orders? Yeah, I mean 2 minute yes, the 1 minute no. I don't trade 1 minute. 1 minute I trade differently. 1 minute, if I'm entering, let me see if I can demonstrate. Hold on. This is what I look for in 1 minute charts. Okay, so again, I use the wedges on the 1 minute, wedge structures, okay? So basically, I want to go long. Say, I do see one right here. Okay, 1, 2, 3. But I don't see, say I don't see anything that happens from there to there. I do have a wedge. Now I look at how the bears are faring because obviously they made new lows, they're still selling, right? But look at that big bear bar. Okay, this is the third push down, but where is a continuation for a big bear bar even on the 1 minute chart like that? I don't see it. Okay, so I don't see it. But I'm going to give bears benefit of the doubt. I'm not going to buy that pullback because there is no good bull bar to buy. I'm going to let them try to sell again. Oh, yep, they sell again. In fact, there is now 3 push here. So I've got 1, 2, 3, 4 push, or 1, 2, 3, and the push continues. But then another breakout. But where is the continuation? You get this bar. You see that big bar? I buy right away. My stop here. Maybe I take profit. I'm looking at this area to be tested. Okay, I'm going to scalp right away, and I'm going to leave a runner. But if it doesn't run, I didn't make much. So the problem with, you look at the ATR on 1 minute chart, 395. At that time, it was even, I think, less, 282. So that's 2 points and 3/4, 275. So that's not a good way to have a living, is it? Like, you have to enter with really big contracts, like enter with, I don't know, like 10 contracts to scalp a point and see if your runner runs. Yeah, that's nice. Let's do that. Who's got the 10 contracts of accounts? I can do that. I cannot even stomach that kind of thing. I can't do that. People can do it. I bet Tom Hugart can do it, but I can't. I don't have that kind of budget. So I rather to look at 5 minute, which gives me enough time to spare to make a decision. And then I get a bigger, ATR value. So that means my scalping is going to be bigger in 1 or 2 bars, right? So I don't have to jumble things and, scramble things on 1 minute chart trying to figure out what I'm doing. This is still coming down, so it didn't work out. We took out that low, so market is still bearish. All right, so we took out that low. We closed a bear bar. Yet we did not continue. So that's first entry. But I want to see another bull bar. You see that bar right there? Bears failed again. Now I can buy again. So I buy that close. Okay. ATR is at that time was 356. 356 is 3.5. Okay. So it's telling me market is going to go from where I entered possibly 3.5. That's 375. 3.5 is right there. Did the market go 3.5? Yes. Can you scalp there? Yes. Can you leave a runner? Yes. Well, look what happened. It just came back down. Might as well just take your full scalp and get out of the way. Because market is still bearish and it's looking for sell, sell zones. Now, where's that sell zone? Resistance is there, but this is the one I'm interested in. From there, possibly to maybe there. I'm going to take the whole thing. So as price gets in there, I know sellers are there, maybe the 50%. Okay, if I find a 50% of this supply zone, okay, I mean, I'm not color coding at the moment, but you got the point, or sell zone, look where they took profit, right there. So you could have your runner run into that 87.91, so roll it to 87.75 or 88. You would take profit and get out. I don't roll it up, I roll it down so I can get out early with a front running. So I get out at 87.75 while these guys are still scrambling to get up here. So that's it. But you didn't get much, did you? Now, if you did that on actually 5 minute chart, this would have been a lot more than 6-7 points. See what I mean? But basically what I'm looking for on the 1 minute chart, failure to sell, second time, and then I look for these really solid bull closes, okay? And maybe 2-leg move. I'm looking for a bull flag, 2 bull bars. That's great. I'm going to buy it. I might even buy that one because it kind of broke the structure of the high. So this is a bull flag now. It's going up. And chances are, look at that. 1, 2, 3, 4 bear bars. Where's my sell zone? Right there. Look at that. You take profit there or you take, that's the second sell. Now I'm looking to sell the supply zone on the 1 minute chart. Look at that. So if I actually sold this somewhere here, market move 10.5 points. I'm sure I can bag a 5-point of that easily on the 1-minute chart. But I don't do it here on the 1 minute. I don't trade the 1 minute. But if I'm going to trade, I look for failures with wedge formations, and I look for these big bars, and I buy them right away while my stop is nearby so I can swing it. Like here, they're selling. Bears try to sell once. Bears try to sell twice. Which bar is buyable? That one. I'm going to buy. I'm going to hit this buy market, buy ask, but I'm not going to do buy bid. I may not be able to get in. Now, buy ask might give you a good. Buy market, I don't know, might give you a 1 tick slippage, but you enter and then you're long. Okay, so if I entered here, what is my ATR? Well, just about 3. Okay, so first I'm going to look to see if bulls market is trying to break that structure. But I'm going to grab that 3 points. I entered here. I'm looking for a 3-point. 3-point came in right there. But look at those wicks. Do you see? I know it's small, but everybody meaning machines who scalped that 3-point, did they scalp out? Yes, look. Upper wick, 2 bars coming down. Why did those 2 bars happen? Why didn't we keep going up to that high? Because they're calculating the ATR, and they're saying there are machines that might be getting 1-to-1 scalp. Their machines might be getting 1.5. Their machines might be getting 2 times the ATR. Like I said, I'm with the 1 time the ATR scalping machines. They scalp, I scalp. Now, if I don't see continuation, if I left a runner, now I'm looking to see if the market is going to break the structure, which, remember, market tried to, break once, failed. Break twice, failed. Remember what Tom Hugard pointed out when somebody asked, hey, can you tell me how did you sell at 3 p.m.? And then he went through the explanation. Go back to the recorded session. Watch it. He actually explained. He saw a resistance. He saw that the bulls were failing to sell. So he waited for market to go there, and he looked for a strong bear bar, and he sold underneath that. And I don't know how he scalped. That part we forgot to ask him. I was thinking about that. I was rewatching. I was like, why didn't we ask that? That was the follow-through question. We totally failed. Maybe he answered. But he talked about how much of his lot that he would scalp and get out and then come down. So he explained, but it's the same thing. This is a supply zone. I want to sell. Bulls are failing. 1 time to sell? Yes. The 2nd time is your actual swing short. That's the one I'm looking for. I'm already teaching you this, okay? So that's the one I want to sell. Which one do you think I'm going to sell? I'm looking for a pin bar. There's a pin bar, but I don't like that. I want to see a pin bar that exceeds that bull bar's high. That one did. I'm selling that. My stop is going to be probably either above that zone or a little bit above there, but I'm swinging this down, okay? So for bulls, if I'm not seeing anything here, I want to see this resistance break. Did they break it? Yes. Now my runner is running. Or I can enter with that. If I enter with that, my stop goes here or whatever the ATR, and I'm going. So you can do this on 1 minute. I would recommend you to do it with micros maybe and get used to it. It's kind of fun trading 1 minute with micros. But regardless, you can do a damage with micros. So this area that I found is actually holding. So it is a solid support right there, right? So we have double bottom. Now, it's the same thing. What did I teach you on the 1 minute? What do I look for? Well, if I want to go long, I want to see weakness in bears, right? 1 time, they tried selling. 2nd time, they tried selling. What does Al says? If price tries to do something twice and it cannot meet the objective, the opposite side will take over. These are his, maybe not exact words, but it is kind of, I don't know. I think that's what he says. I'm pretty sure that's what he says. So what do you think if the bears are failing here for the second time? The bulls are going to take over. What am I looking for? I'm looking for a really good bull bar close. Well, bar 14 doesn't cut it, okay, but the machines will get in. They're going to buy one tick above it, and they're going to either put their stop there or here, okay? They're going to get in. I'm looking for a better one. That better one is bar 15. I buy that. Now I'm looking for, you see that resistance? I want that resistance to be broken with a bull body. If they do break it, we're going up here. That means my runner is going to run. But if they cannot break it, say I entered right there, okay, 43.75. 43.75, the ATR was 941. Goodness, 941, that's actually 925. So 4.5 points I want to scalp, half the ATR. That's 4. Did I get my 4.5 points and an extra couple of ticks to cover the front running? I mean, not the front running, but it went above 4.5 and filled everybody who were going, when I say everybody, the machines, going for the half the point. Now it's 8.44, but I don't care. I already scalp, I'm out. Now, my stop probably at break even plus. So I'm sitting right there with my stop. It can come and hit it and get me out before going back up. There is that, caveat when you move your stop to a break even. But who cares? I made 4.5 points. I'm good. I do this twice, okay? That's 9 points a day with a couple of contracts. So anyway, I want to go back to reading the price action. So this was just an example. All right, so what do I see here? Well, the support is holding. I'm going to go back to 3-minute chart real quick. So you can see the wedge, right? First pullback, second pullback, and third, and a double bottom. Bulls are trying to get a major trend reversal, but even though they're going up to my targets now, sellers are waiting there. So I'm going to switch back to, if you're wondering why this is reversing and you completely missed that this is actually support the way I found it, okay? Because you're missing that 3 push wedge and a double bottom. It's probably visible on the lower time frame if you cannot read the pullbacks when you have gap bars like that. So gap means there are probably extra legs there and a pause. Okay, so you can find those structures on a lower time frame. So we're reversing. We have a double bottom, and I said we're probably going to go up and test the 36.54. Okay, so if you actually bought the bar 14 high 1 tick above, you're still in your long. You probably want to scalp either 1 tick below 54, so that would be 53.75, or just hang on to it all the way up to the edge of that sell zone. Now, could this be minor? Well, they're kind of reversing with a higher low. So we could have a truncated wedge, 1 pullback, 2 pullback, 3. So it's like this, truncated wedge. So that leg, 13 to 14, could be the third leg, and the bulls are reversing. So you could read that way too. Truncated wedges are a little bit complicated, but there's a whole video about it that you can go watch, how L sees them or spots them. I'm never perfect when I'm calling them, but if I'm too lazy to go down to the 3-minute or 2-minute chart to count the actual wedge formation, I'm just going to basically conclude that this is a truncated wedge. And the bears try to sell twice there and completely failed. I'm going to buy a good bull close. 14 is okay. I can buy 1 tick above, still go along. That I might actually add a little bit more. I might add more right there because they're probably going to break out of there. Now we're getting into some resistance area with bar 4 low, but a little bit more room possibly to the upside. Maybe 10 bars and 2 legs to reversal, maybe 1, 2, 3, 4, 5, 6, 7, 8. So we might get 2 more bars and get to the EMA possibly. Okay, so there's still room there. That's it. First target met at 36.54. Now I like to see a continuation into that purple zone, which is a strong. If it's purple, it's a stronger sell zone. And the bear is probably going to try to sell twice in there. Okay, so see how the machines are taking profit right at the bar 4 low? But bulls want to, what do the bulls want? They want to overlap a body with the bar 5 body. Why is that? What is bar 5? That's an institutional trap order, okay? They try to trap the bulls or potential bulls who wanted to buy the market sometime around 10 o'clock, although I don't know. That is not 10 o'clock. So yeah, just about 10 o'clock. So they were assuming, yeah, we should make a double bottom and go. But those are the traders that either they're new traders, they don't know any better, or institutions buying early, buying more. As price gets up there, they make money, okay? So they might be buying early. Or another way of reading, and my favorite way, if I see one single bar like that, and it has a really strong bull body, meaning closing, okay, on its mid-level or higher, but not lower than mid-level. That means it's actually, the fancy word for it is order block, but it's somebody else's invention. Basically what it is the institutional order to trap the traders to buy, entice them to buy, only to reverse the market back down or continue the market in its original direction down. So you're stuck there. Al Brooks calls it bad signal bar. Therefore, bad signal bars become magnets. What do I look as objective? Not just to go test the low of that bar. I would like to see market actually overlap with its body in order to close this bear gap. If this bar closes down here and fails to overlap a body with the body of bar 5, that means this bear gap is still open. That means we could get our first sell, then bulls will try again to close, and then we get our second sell. So what do you see right there? Bears are trying to prevent that overlap. So when you're reading price action, understand why things happen, for what reason, okay? That'll make your life easy when you're taking profits or just about to open a trade to go long. You could stop yourself from doing the wrong thing. And that's the significance of that body. To me, that's a very bad signal for bulls to buy there. So therefore, they're stock traders. They want market to go up there so they can get out. And that's how Brad will explain it to you. All right. See how we're selling? I said it's a very strong sell zone. Now, if you want to see really strong sell with this first touch of this purple zone, the sell zone, you want to see a really strong pin bar, okay, with a bear body. Chances are bulls are going to try again. So that's the one that I would like to sell. So if I sell again, you have to be prepared to sell again for the second time. What if it doesn't sell? Well, say you sold here and this doesn't go down. Now it goes back and gives you a second chance to sell and break even as it comes down. If this zone is not going to sell and we're going to reverse up, it only gave you a second time to sell again to break even here as it comes down and reverses. You lost nothing. So bar 18 is not a good sell signal. So this tells me bulls are going to try probably to go back up again and test that zone. So now whomever sold here, aka machines, are disappointed. So now they're getting ready to sell again because they're disappointed. It is a good sell signal? Well, I don't know. Let's zoom in to see if there's any bear body. There's nothing there. It's a perfect doji. So that means it's not a good sell signal. So that means we're going to test this zone once again. And plus the bulls are still trying to get their 10 bar 2 legs up to EMA. And chances are we're going to test that EMA, but I don't know. Okay, so we're testing for the second time. I'm going to take a quick break, guys. And be right back. Okay, I am back. How do you like my new slippers and socks? They're pretty cool, aren't they? Okay, so we're now back inside. They try to sell for the second time. You see those two dojis? That's another sell, but I warned you, if they're not going to sell this area, if you have sold this bar 18 and disappointed, you're going to have to sell again to break even and get out, because I don't see a good bear pin bar. You want these levels to be good, strong sell zones. Now, they're already swinging this, and look at this, no bear bars. Instead, you get these dojis. So this could be a small pullback bull trend. These are the pullbacks at this point, and if the pullbacks are only a doji with no bear body, maybe I was wrong with this area. I'm probably not. They're going to sell it. They'll probably try to run, okay, some stops. But really the whole idea I explained, market really wants to go and test one tick above that bar to get the money that they throw into the market to trap the bulls earlier with bar 5. So that's what the rush is. Now, can they sell? Yes. Remember, sell zones, say this is the sell zone, okay, especially if it's purple, stops are generally above it, maybe a 1 or 2 point above it. Those who are selling supply zones, this is where they need to put their stops above. So if market really wants to swing this down, it needs to create some kind of frenzy. And that starts with making the market look bullish, and then more bulls jump in, and then run some stops, confuse the bulls, and then kick out those who actually sold here, all right, or sold here. So upset bunch of different kind of traders or machines only to sell further. It might even sell a little bit, then makes a higher low, and it goes right back up again. So this is how the traps are set. So I like to see a clear sell-off with a second sell. So I don't have a good sell signal. We're still inside the zone. So this zone can still sell, all right? But you need a good sell signal bar. So bar 18 and 19 were not good, but even if you sold, you made some money, okay, selling. But if you're not seeing any continuation bear bars, you're going to have to get out, because it could sell inside or at the high before coming down. But it will come down, at least a little bit. I'm looking to see what can happen here. So the market is reacting to the zone. That's good. I'm not interested in this level anymore. There's also a wedge there. 1 pullback, 2 pullback, and 3. So yeah. So the sell zone is still working just fine. And you can't just put a one single order and try to sell it. Most of the time, they lace this area with sell orders, okay, including above. As price goes in, deeper pullbacks, but it's going to sell either way. So bar 21 is an inside bar. So we have IOI, okay. You can see that bar 19 is an inside bar, bar 20 is an outside up bar, and then we have an inside bar 21. So it's a breakout mode. And bar 21 closed pretty strong, but it really couldn't come down all the way to the open of bar 20. So how strong is this? But it is taking out about 60% of its body, right? So it should get at least a little bit of continuation. Now, if you have a wedge here, if the bar that created the third leg up is too big, I don't generally take that as finding my boundaries, I take the one after, if it's, because it's a bear bar. So basically I'm looking for a bear signal bar if I want to sell this, okay? And because many bulls got stuck buying that, so they probably want to get out, break even. There might be some buyers here. I don't want to prematurely sell this close, okay? I want to wait. In fact, I want to sell the second entry short signal. So how would I do that? Right? So basically I am waiting for at least the first signal. I want to see bears able to close a bear body outside of this box. I may or may not sell it. I would prefer a pullback retest, maybe a little bit inside since the range is big, and then look for a second entry short and then sell it. I don't even have a signal. Not yet. Why? Because I explained the psychology. The reason why, if they're not selling this, it's because they're probably buyers got stuck there. So they're buying the wick and possibly underneath, okay, to get to a break even, maybe somewhere there, to get out with their first entry. And then with the second entry, they're going to hope that these bars go up and test the close or maybe high, so they can make money with their second entry. They bought here or they bought here. But if you're trying to break even, just break even. The reason why you're buying again low to get a better entry price somewhere in the middle, okay, down here. So if your goal is to break even, then break even. Don't sit there and hope to make a little bit money just because you bought lower with a second contract. Because it may not fulfill, okay, your needs by taking the market up here. It might just go up here and then just collapse. What are you going to do then? Then you're upset again because you didn't break even where you were supposed to break even. That's something that you learn and becomes practice. But, the way that Al explains it is that, when you buy with the first contract, you're in trouble. So you buy lower to break even. But he has to explain it to you. If you bought here, you would normally expect to make money there with that second one. All right, so we still don't have a breakout signal, but you see how the bulls got stuck here, bought again there. But this area is selling. So if you actually had, maybe somewhere in the middle a sell order, and maybe up here, you would not get filled with that one, but you got filled with those two. So you're making money. Yep, so it's IOI and another I. So we're stuck in bar 20 range. Bears are trying to break from the low of bar 20. They need to close a bear bar in order to get to their scalping targets at 43.50 and 37. Without that bear close, either with bar 23 or 24, I'm not interested in, okay, selling and scalping at those levels. Because we're testing the low of bar 20, and there might be trap there a little bit at the low of 20 and furthermore down below. So trap goes all the way down to 47.75, and I don't want to be selling right here only to get stuck in a trap that actually price goes down here and then makes a wick and goes right back to the 50% of bar 20. I don't want that. I want to see a solid signal, meaning I want to see this bar 23 close at least one tick below bar 20 low. Now, I'm explaining two different things here. So I'm not So the two things that I'm explaining here is that this sells on how you would sell, and I'm also showing you that there is a wedge here, okay? So if you're trying to sell this wedge, okay, I said I would not sell right away because the bulls are going to try to maybe buy here or buy here. I don't want to be stuck in that. And frankly, did you get a second consecutive bear bar after bar 21? No, you didn't. So the selling is not that strong, is it? So there's a potential of bars to go back up here before selling. So I said I would look for a second entry sell signal. If you sold, you basically sold inside here. You're already in your short. But if you didn't know anything about this bar 5 and why you would wait for price to come and overlap with it before selling, then you're looking for a wedge formation. Now, if you do sell, okay, say you put a sell stop order one tick underneath bar 21, where is your stop? Your stop is up here. So you're hoping that you're going to get a 5-point from underneath bar 21. Price is struggling. They're probably going to get it if they can actually close a bear bar. So I'm giving you a reference, some kind of boundary line, okay, like that box. If we do close actually a bear bar below that yellow box or low of bar 21, we might continue to sell into that 5-point scalp zone. But there's also a chance for this to actually reverse right back in. So that's why I'm looking for that solid bear bar close. See, we still don't have it. 24 seconds left. And if it doesn't, say it didn't close and completely trapped those who sold with one tick under, they already made their 1 point. They already made money. So it's if they don't see continuation, they might quickly bring that stop to the break even and get out, because price can just go up here before coming back down with a second entry. See, did we close a body 1 tick below bar 20? No, we didn't. But put a line there, you'll see. We closed right at the edge. That is not a close. But we did close a bear body outside of this wedge box. So that's a good thing. So what are they going to do? You're going to look for a pullback, and then you're going to look for a continuation down. So now it's pulling back to the boundary line, and see if we can get a sell finally. If it doesn't, that means this is still pulling back in. It might even go all the way up here. But you got your first sell signal. Now, where is your second entry short? You can say, listen, bar 21 closed really nicely bearish, although it didn't take out the prior bar's low. So it's not a true, sell signal, right? But it's good enough, right? So you could still sell that and expect continuation. Then you could say, well, maybe this is our second sell. But because it's not that clear, this is going to pull back. So I would either sell the pullback, or I would wait for this bar to close and then jump in. But if you're trading with you're taking this as your reference because that was the last bar, did the third push up, you still don't have a bear close outside. So you see bar 20 low, we did not breach. Neither on the micros nor on the E-mini, we still don't have a breach of that bar. We're still stuck inside that bar's range. So that's why we're pulling back so hard, because bulls want to go back to the 50% of that bar 20's range and then maybe sell or close above it and then go furthermore beyond. So that's why I said this is very difficult now, because you're trying to sell against a leg, okay, that has no bear bars. It's kind of a strong leg. So the bulls might be trying to create a small pullback bull trend here. I'm just reading the signals and how bars open and close, why things happen the way they happen, because something's failing there. Okay, so we have a pullback. If they close this bar bullish, that's a breakout, pullback, and continuation possibly. I still need that bear bar close. Then bears will try to probably get down to 43.75 and bounce there. See if we can actually see this bar close on its low. Swing bulls want a higher low and go long. Bulls want a double bottom with bar 16 low. So we might end up coming down there before bouncing, but still no bear bar closed below bar 20 low. And that's why the bears are struggling here. Is they're wondering, is this the first sell signal and it was never a second sell signal and that's why we can't sell? That's exactly why. So this is trying to go back up to the 36.56.50, 56.50. If you read the conditions, you can get a feel and understanding of why things are failing, why a bar like 21 and 23 didn't sell. Because I've taken this as my reference, as range. And I said, yes, we have a breakout. That was the signal. That's great. But that's not really a good sell. So it's probably going to pull back. I'd like to see a second sell if I'm going to sell this. See, still no bear bar closing. So therefore, we could not get to that first bear target, which was still at 43.75. And that's the shallow target, but no bear bar closing, we're never going to reach that. And if we do close, finally, a bear bar somewhere down here, okay, we could end up coming all the way down to, once again, 36.37. But watch out, bulls want double bottom with bar 17. Now why? Let's talk about that. Bar 17 is the breakout bar. So there's support there. So somewhere around here, we could test and bounce. So be careful if you're selling this already. Bunch of bars sideways, so it's limit order market. Where do you think the limit order market sellers are? Above, at the high, or at the upper wick of 24? Because it was a really good bull close. But I warned you about coming back and testing this area again to get the qualifying second entry short. I don't have the bar yet. We have the pullback 24 and 25. Bears really need to close this bar bullish. If they cannot close bullish, that means there's no selling, because this is where the bulls want to go and break out and reverse. That means wedge failure and continuation in the direction of this original move. So it's very difficult here because bulls want another leg up by going sideways. Now I'm watching the 50% level right here. See what the market is going to do there. Now, if you actually measure the 50% for bar 20, we just tagged it, right? So that's around here, 56.50, I said. So we have a pullback, tested. In order for bears to sell it, they need to close a bear bar. If we start to close above that 56.50, then bears are going to be quick to get out if they have sold already, because potentially we can go right back up here. So we're struggling now. I'm waiting how this bar is going to close. Struggling now. I'm waiting how this bar is going to close. We had a two-legged sell from the sell zone, but that's all we got. Now, can we sell more? I just have to be patient to see if that is possible. For scalpers, scalping machines, they sold above 24. They made money. They do not want to see this bar close bullish. They do not want to see this bar close bullish. Where else can the bears be waiting at? Maybe at these highs again. Now, look what's happening here, guys. We are below the EMA, the 1 hour EMA, which is right there. And we're again started to go parallel. So we're going sideways, right? So we have bear market and two-legged move. It's really nice. We might be getting ready to sell this again. But market will sell anything they see strongly bullish above the EMA, just like bar 20. And they're going to buy anything they see below the EMA strongly bearish, like 23. So we might end up getting another bull bar, maybe a double top, and then we sell, or we're going to get a lower high and then we sell. But some kind of strong bull bar market might be looking for. Bulls are trying to close a bar above 36.56. They're trying to get back up here, maybe double top, possible double top, and a double bottom here. So it's a very sideways market at the moment. So therefore, it's limit order. I'm going to remove these too many boxes, confusing. We're still in the sell zone. Now, for bears, look what happened here, right? So this is support right there. They want to break this strongly with a bear bar, and we're going to probably get acceleration, okay, it's into 36.37, maybe even into 36.30, which is the low of bar 10. Bulls, on the other hand, see this double top, and they see cup and a small cup, and they want to break it, okay, with a bull body and get a measured move up. So market is deciding here. Because these zones are strong zones, I expect two sell opportunities. Here's the first sell. I'm looking for a second sell. Bar 21 was your first sell signal from this zone. Also the wedge, but now I'm looking for a second sell. So I want to see bears come to minimum 36.43.75 and tag it if they can close this bar bearish and open another one. And then continue selling down. For bulls, they're trying to trap the bears and get a second leg up, but decision hasn't been made yet. I don't have a good sell signal bar yet for the second time selling from this area. What if we just go up and sell there? That's possible. So then we would have 1, 2, and 3 wedge and a bear flag, possibly. We're still pulling back to the range of bar 21. This is still the pullback, no second sell signal yet. So you need high probability sell. We don't have that bar yet. Now, sell stop orders probably trailed right underneath bar 25 low, 1 tick below. So they're hoping that this bar now, 26, is going to close on its low, so that they can actually lower it right, move it, trail it right underneath bar 26 low. And then bears, they hope to get swept away and grab a point, just like I explained earlier, and then scalp with a ATR value and then go down to the lows with their runner or furthermore. So market is still bearish. So this could be sell the pullback for bears. It's very difficult to trade because it's going sideways. So your job is to spot the second entry short. We don't have that yet. So basically, this is what you're looking for. Now, take a look here. We have a wedge here, right, to the 15-minute chart. So 1, 2, 3 wedge. Look at this. That's exactly what happened here is happening here, right? We had a bear close, but always expect a pullback. That's your first sell. Now we go back up. We rescue those bulls who got stuck there with break even. Where's your second entry? Right there. That's the second entry short, and it also closed outside of the range of that box. So that's the one that you sell. It actually got a huge swing now. So if you're trying to swing this short, that's what you're looking for. So you want to see this bar 27 now, okay? Breach bar 26 low and close bearish if you want to sell. Now, the sell stop orders are 1 tick below bar 26, possibly waiting there, because they're betting against bulls and they're hoping that the bears are going to sell with the second sell. What they're going to do is their stop orders are 1 tick below the low. That means they're at the 36.50 waiting with multiple contracts. They're going to try to scalp at 36.49 quickly. Okay, so the price needs to go to 48.75 to fill everybody's first point scalp. I'm reading this on micro. On E-mini, you are trying to get filled at 49.75. There's always a 1 tick slippage. So that means if you do get filled at 49.75, you're going to look to scalp at 48.75. That means price needs to tag 48.50 in order to give you 1 point scalp. No one has gotten filled. So everybody's safe right now because can this go back up just like it did here? Yes, it can. I still don't have a second sell signal from this box, this zone, sell zone, nor from this pullback. So this is where, Dale, I just looked at this. Very nice. Excellent. Now you can go make snow angels. So this is where it gets fun, right? So don't say to yourself, I cannot trade this. Just say to yourself, I cannot trade this because it's so difficult. I cannot trade it because I still cannot see my signals yet, the way that Rose just taught me. So it becomes a game, right? See? No one got filled with a sell order, so they're all safe. So the pullback hasn't yet finished, so we're still going up. No sell signal, I cannot sell. So isn't this great? So you're keeping yourself away from entering early. Or if you entered here with the first sell, you know you're not going to go too far. Now take a look at what's happening with 24, 25, 26. Let's look at this from the bull's perspective. Look at those bodies. Yesterday I explained the stair steps for bears and the stair steps, okay, for bulls. That means even though the bodies are small, but they're able to open the bodies where the prior bar closes and close them even higher, even though they're small. That means this is a bullish momentum. Bulls are trying to build a bullish momentum here. So because they want to go, they see this as a higher low, and they want to continue this small pullback bull trend, but they need to break bar 20 high with a bull bar. Okay, then I don't mind buying, but I didn't see a bear close, so I can't sell into those bear targets. Here, I'm going to clean this up and show you what I mean. Okay, I said we're stuck inside the bar 20, outside bar, inside, outside, inside, no breakout. So breakout didn't happen. I cannot assume I'm going to sell this and take profit at these targets. So now I'm seeing a momentum and the 50% we're breaching, okay, of this range. So I want to see a breakout, a bull bar closing up here, okay, a bull bar closing above that line, shallow target 1, actual target 1, and the final 1-to-1 target from the structure measured move up. I don't see it yet. Now, can I buy this early? Sure, I can buy this early. Maybe put my stop, I don't know, underneath here, somewhere close, because if it fails, so I don't really lose, because trying to trade inside this range is very difficult. So I tend to wait for the breakouts with a bull body. Maybe I enter there with a pullback, first scalp, second scalp, and then I take profit there. All right, so bears failed, but how about the bears who try to sell this wedge? Well, they're failed because they don't know how to read it. They don't know how to read the conditions right. But we're still, I mean, I removed that sell zone, but we're still in the sell zone. And I said we could end up going and testing here, and we could have a false breakout, breach this high, bar 20 high, and not be able to close a bull bar, only to have a big wick and then collapse back down. Then game on for bears for these targets down here. So I sit on my hands and do nothing time to time, like right now. But for bulls, they were looking for a second leg up. Why? Because there are no bear bars, so this is still a strong bull. Okay, leg, so they're trying to get a second leg up. Market makers, they're trying to get their money back. There's so many things happening, so many moving parts. They're trying to get above it, test one tick above this line to make all that money back. Okay, then they will decide. Now, bears want to double top at the EMA, lower high and sell. Okay. Some bulls see head and shoulder, I'm sorry, some bulls see cup handle, and they see this area as a great buy stop opportunity. They start to park their buy stops. So you got to pick a side what you want to be. So I make my life easy, okay? I see IOI and a failed breakout. Okay, fine. Maybe I can buy one tick above 24 and go long and scalp as I get to the high of 20. Okay, and if I want to go further up, then I would look for a breakout above bar 20, because I know there's buy stop orders waiting. Some institutions will buy and try to take profit there probably. So I could jump in. I could wait for that. I could jump in. Or I see institutions getting trapped there by buying, and then we end up closing the bar here bearish. I might actually sell if it's a good sell signal bar closing, taking out some lows to the left side of those bars, then that will be my second sell from the highs, and I could sell. Nothing is set up yet if you have not bought one tick above bar 24. So many ways to trade the market or the bars in front of you. That's why I love the 5-minute chart. It gives me enough time to understand what's happening, all the scenarios, who's doing what and who's winning, and I could just trade with that certain group that making money. Yes, if I want to sell, I want to see some bear pressure, so bear bars need to actually break out of bar 20's range. If you notice, all of these bars are stuck in it. None of these bars actually closed outside of 20 range. So bears failed utterly, and bulls are trying to, you see how the momentum built and now they're getting bigger bars? Because their goal is to break above this right here. Bulls want to double top. They want to prevent, bears want to double top. They want to prevent it. So we now have a trading range here. I'm almost done with my session, everyone. So, but I will be back in the Discord for a couple of hours. And I'll try to post inside the ES analysis read only this time. I haven't gone through the encyclopedia, so I'll try to find some examples for remainder of the day what it can do. It's trying to get to the Globex low. And like I said, if we do start to swing, I'm going to try to see if we can get up to these levels right here. I think the sellers are waiting there, sellers are waiting here. So this is what I'm interested for bulls between that high and that right here, 3681. All right, so we just met the first target. Bulls are trying to get to the second target, but they haven't closed the bar. They just overshot it because ATR is too big, so that's why it's called shallow target. It's kind of given. It's in the bag. Now, you want to see that bar close bullish outside, not collapse back in and trap the bulls, okay? So you have a wedge here, and machines see that, and they're trying to excite these bulls. If this bar closes here, chances are we're going to go there, and we're going to get a 1-to-1. We got magnets up here. So magnets is 3691, 3681. So somewhere here, we might end up going up, okay, on the Globex chart. But the goal is to get to the Globex low first. All right, I'm going to end my session, and I'll see you guys in the trade room. On Discord.